Nothing is certain in this life apart from death and taxes. And the taxes part, maybe not if you're Donald Trump, because overnight we've had some shocking revelations from the New York Times. Apparently, Trump paid only $750 in federal taxes in the year in which he was seeking an election, and then again just $750 in federal taxes in his first year as US president. The report also says that he paid zero income tax in 10 for the last 15 years. So in response to this news, Donald Trump branded it fake news.
You are fake news.
And in this video, we're going to talk about how to pay tax like Trump. I'm Martin Bamford, a chartered financial planner at Informed Choice, and in this video, how to pay tax like Trump.
It's the only years that anybody's ever seen were a couple of years when he had to turn them over to state authorities when he was trying to get a casino license, and they showed he didn't pay any federal income tax. So
that makes
if
me
he's
smart.
paid.
Before I get started with this video, three quick disclaimers. Firstly, allegedly, we're basing this on reports from the New York Times. Please don't sue me, Mr. Trump. We don't know for sure the details. We just know what happened in the news overnight. So we're talking about that aspect here. Secondly, tax is horribly complex and complicated.
I'm a very stable genius.
Particularly so US tax, and everything I talk about in this video is going to relate to the UK tax system. But please do seek professional advice before making any decisions, before doing any tax planning of any sort. That's really important. And finally, there is a world of difference between tax avoidance and tax evasion. Now, avoidance is entirely legal and fine and proper to do. In fact, all of us have the right to arrange our tax affairs in such a way to pay the least amount of tax we have to pay. Tax evasion, on the other hand, is illegal. You will get into a huge amount of trouble if you carry out tax evasion. Nothing I talk about in this video relates to tax evasion. This is all about tax avoidance, which is, as I say, legal. There are some questions about whether it is moral and ethical, particularly in the given economic climate, where we're all going to have to pay back so much of the government financial support received during the COVID-19 pandemic. But with those three quick disclaimers out of the way, I'd like to talk about how to pay tax like Trump. In other words, how to pay as little tax as possible. And I think the best place to start really is how much tax we waste each year. And it's fair to say that we waste a huge amount of tax each year here in the UK. Some research recently from Unbiased found that we waste on total £12.6 billion a year in tax that's unnecessarily paid. Now that's about £420 per taxpayer wasted on tax. So starting with that wasted tax seems to me like a good place to begin if we're looking at how to pay less tax, how to pay tax like Trump. And the top three areas of wasted tax. Firstly is income related tax credits. Secondly is pension contribution tax relief, and thirdly is charitable contribution tax relief. So in those three areas, just look and make sure you're claiming the best possible reliefs, the best possible allowances, because that's where the majority of income tax and taxes here in the UK are wasted each year. But if you really want to drive your tax bill down, we have to talk about ways to claim reliefs and allowances and pay less tax. So starting with income tax, and probably the biggest difference you can make to your income tax bill each year is to pay pension contributions. Now, the tax relief available on pension contributions here in the UK, again, is quite complicated, but in essence, if you pay money into a private pension pot as a private individual, so not your employer doing it, but you as an individual, then you get two types of tax relief. You get basic rate income tax relief added directly to the pension pot at 20%. You also then get the difference between your basic rate and your highest rate of tax knocked off your tax bill, the self-assessment tax bill each year. So if you're a higher rate taxpayer or an additional rate taxpayer, making pension contributions can be a very effective way of paying less tax each year. Another very effective way to pay less tax, and it's an often overlooked way, is to make sure you use your partner's allowance. So if you're in a married couple or a civil partnership, you can effectively swap assets between each other and make sure the partner, the spouse who has the lowest income, receives and holds the assets paying an income out. That way you pay the least possible amount of tax on those income producing assets. This also works very well for capital gains tax, where you can make a transfer of an asset before you dispose of it. So the capital gains tax is assessed on the lower tax paying member of the couple. And again, very effective, very simple way of doing things, but often overlooked. Something else you must do if you want to pay tax like Trump is to keep really good records. And this one's particularly important if you want to claim inheritance tax relief, even during your lifetime or once you've died. Really important once you've died. The number of times we come across families who we know and they know their loved one that they've lost has made significant contributions and gifts, but they can't prove it. They don't have any records to demonstrate to the tax man that those gifts were made. So keep really good records of anything you spend, any gifts you make, particularly things like charitable donations. If you don't have a record of your charitable donations, it's very difficult for your accountant to then claim that back and reduce your income tax bill as a result. Now, if you want to get up to a Trump level of tax planning, you need to start a business. Starting a business, having your own business, is one of the most powerful ways to pay tax like Trump, because you can just knock off so many forms of tax relief and allowances to reduce your eventual tax bill. Now, some ways of paying less tax as a business owner. One, again, is to make pension contributions. So if the business makes a pension contribution, the size of that pension contribution gets knocked off your corporation tax bill for the year, so you can make some quite sizable tax savings there. You can claim allowances and expenses. Any expenses you claim through a business have to be wholly and exclusively for the purpose of the business. So you can't go out there and start spending money on things for your personal life and then saying the business should have paid for it and therefore you don't pay tax on it. It has to be for business purposes, but your accountant will be able to give you a really good steer on what is and isn't acceptable as an allowable expense. You can also, as a business owner, take advantage of capital allowances. Now, capital allowances are one of the reasons why I have a brand new Tesla sitting on my driveway, because it has a 100% writing off allowance for corporation tax in this year. That means the full value of that car was offset against our corporation tax bill, our taxable revenue, our taxable profits this year, and we therefore paid 20% less corporation tax on the value of the car, as well as some other quite attractive government incentives to buy an electric vehicle. So electric vehicles are a good way to access those capital allowances. As a limited company business owner, you also get access to what's called entrepreneurs relief, or business asset disposal relief. And what entrepreneurs relief means is you only pay 10% capital gains tax on the value of your business that you sell, assuming you meet some criteria. You have to hold on to those shares for a couple of years. You have to own at least 5% of the company. Some other rules too. But it's much preferable to paying capital gains tax at 28% as a higher rate taxpayer. So if you can pay it at 10% through the entrepreneurs relief, that's a good win as well. And also, as a limited company owner, one of the main attractions from an income point of view is being paid in dividends rather than salaries. And dividends broadly have a lower income tax rate attached to them than paid salary does. So you can save a bit of money on your tax bill each year that way too. So in conclusion, if you would like to pay tax like Trump, i.e. as little as possible, then you need to plan for it. It doesn't just happen by accident. This happens as a result of good planning, taking advice where necessary. So do speak to a professional advisor. Usually that means working with a chartered accountant and also a chartered financial planner. So don't just take the tax advice, understand how this tax planning fits within your financial plan. Please make sure you do this legally and ethically. So tax avoidance, not tax evasion, and tax avoidance which isn't pushing any boundaries. Now, in our experience, any attempts to use tax avoidance schemes which push those boundaries ends in failure. It ends in a great deal of expense and sadness and frustration for the taxpayer. So don't try and use tax avoidance schemes which disguise your remuneration, which involve loans and loans being repaid, that sort of thing. So don't go down the dodgy end of a tax avoidance scheme. Stick to tried and tested methods like pension contributions, things that we know work, things that we know the Revenue and Customs really do approve of, and you'll stay on quite a safe place. Otherwise, it gets very risky and very expensive very quickly.
If we're finished with the audit, I would have an open mind to it. I would say that, but I don't want to do it during the audit. And really, no lawyer, even from the other side, they say often, not always, but when you're under audit, you don't subject it to that. You get it done and then you release it.
I hope you found that video useful and interesting. Do leave a like, and also please comment below, what do you think about Donald Trump's tax affairs, and do you think it's moral and ethical and right in the current economic climate to try and save tax, to try and pay as little tax as possible? Where do you stand on that line between tax avoidance and tax evasion? Or is all tax avoidance tax evasion in your mind? I'd love to hear from you. Comment below. Do subscribe to our channel or our page to get future videos like this as well, and thank you for watching.